Stocks are on the move this morning. Tesla shares are surging. In fact, they're up by more than 13% right now. You've also got Apple and Alphabet that are higher. Apple just barely. It's up by about 6 cents. Meta shares down by about 1.6% this morning. And joining us right now to talk through all of it is Gene Munster. He's Deepwater Asset Management managing partner. Gene, we've talked a lot about the tax policy proposals that we might be seeing in this new administration. We have not touched as much on the regulatory overhang and what that might look like for some of these tech stocks. I think people are assuming it will be a very different regulatory overhang, but at the same time, the tech stocks were targeted by the first Trump administration. So how do you play this out?
I think you put the three factors together here, Becky. It's first the tariffs, the taxes, that piece. That's probably a net mixed neutral. On the regulatory front, this is going to be positive for big tech. There's no question about it, is that smaller government means smaller regulatory influence. This is a direct positive impact today on Google. The probability that they get broken up just declined today. A direct positive impact on Apple, the probability that they can maintain that very lucrative $15 billion search agreement with Google. It's about 20% of Apple's operating income, them keeping that increased. And the probability of big tech being able to acquire companies like Databricks, Anthropic, Perplexity, these companies 24 hours ago were really off the table. These are kind of cornerstone, anointed AI companies that would be coveted by some of the big tech. I think that probability just went up. So I think when you put the mix together, at least on the political side, this is a positive day, with the one outlier, of course, being Meta. Trump's comments back in March that Facebook is the enemy of the people. I think that basically reduces the probability that we're going to see some sort of a TikTok ban on. So I think that piece of regulation in TikTok, I think that declined dramatically today. But overall, Becky, I think that this is, on the regulatory side, it's most promising for big tech.
Hey, Gene, you had the FTC with Lina Khan almost working hand in hand with the EU with some of these big regulatory reaches. Apple has faced so much trouble with the EU in particular, just what we've heard this week about the new fine that could be coming from the EU or is expected to be coming from the EU. How does this change if the United States regulators aren't working along with the EU? Will they stand up for these companies? Will it change the European strategy?
I don't think it's going to have much impact on how Europe is approaching things. But again, the probability that something happens on the regulatory front in the U.S., let's just kind of look for one piece that has been the center of a bullseye, which is what Apple is doing on their App Store. The EU's required a lot of changes related to some of their policies around steering. Apple's won some important cases in the U.S., but there's still this lingering concern from investors about what happens with the take rate on the App Store. And I think that the EU historically has set precedent. I don't believe that is going to be the case, at least for the next 4 years. And so I think for investors, and just take that case of Apple, they can rest better tonight knowing that there's probably not going to be that pressure coming from the EU. Again, I think that this is just a marked step forward. And why it's so important, why this timing is so important, is because AI, I think, we're still early in the phases. Ultimately, I believe this is going to be more impactful than what the internet is. And I think having less of a regulatory environment is going to be most advantageous to these companies.
Can we talk Tesla very quickly? That stock up 13%, and we've posited a lot about why that may be. Obviously, Elon Musk, very close to this administration, could even be playing a major role in this administration. What does it mean for Tesla shares? Obviously, better regulatory overlook, maybe less competition that's going to be coming in from China and other places, but Tesla also has probably roughly 40% of its sales coming from China, and that Trump administration with these tariffs may not be making many friends over in China.
I believe Tesla is up today because of emotion. And I think the emotion of Tesla investors, their leader, of course, is Elon. He just had a big bet that paid off. And then we quickly look to what's the next big bet and the probabilities. And the next big bet for Tesla is around autonomy. And he's been very clear that this is the future of the company. And forget about what's going to happen with EVs and tax credit. What matters when it comes to Trump and Elon Musk is Trump's ability to make it easier for Musk to advance what they're doing around autonomy, around their tech stack, to use less LiDAR, for example. That is going to be the regulatory piece around FSD autonomy is going to be more challenging than the technology piece. And that took a big step forward today. And what that means is the potential for the robotaxi fee that could add 20% to Tesla's business in the next 5 to 7 years. That just
Gene, but if you look at Rivian, it's down. What's the thought there?
The Rivian doesn't have the autonomy story to it. And I think that when it comes, again, the tax credit piece, who knows what's going to happen with that. Trump's kind of adjusted his message more recently on that. But the reason why I think Rivian's down and Tesla is up is that Elon has showed that he can make a big bet and be successful. His next big bet's autonomy. And I think his relationship with Trump will change the relationship between Tesla and NHTSA. And I think that's going to be positive for what's going to come around autonomy.